Good morning and welcome to the Killik and Co Market Update. This week we've seen some big positive moves in global markets following a cut in Chinese interest rates and some assurances from the Chinese government that there are some more policies coming down the tracks that are aimed at boosting growth in the Chinese economy and at boosting consumption in particular. Here's the one-year China loan prime rate, which is one of the country's key interest rates over the last 10 years. You can see it's only been moving in one direction, down. While much of the world had to raise interest rates to combat high inflation in 2021 and 2022, the Chinese economy was suffering from a lack of demand and arguably had a problem with deflation rather than inflation. We've talked about the weak performance of Chinese markets in several recent videos, but here's a reminder of how the MSCI China Index has performed since 2019. It's lost about half its value since its peak in early 2021. However, you can see a move higher this week following the interest rate cuts and the commentary about more stimulus. Many investors have chosen not to invest directly in China in recent years, but the Chinese economy will still have an impact on global investment portfolios. It's the second largest economy in the world, and it's still an important contributor to global demand and supply. For example, Rio Tinto, one of the world's largest mining companies, is listed in London, but it earns 56% of its revenue from China. Here's its global revenue breakdown. Mining shares have had a decent bounce this week. China is also an important part of the luxury goods market. In 2023, 23% of global luxury goods demand came from China. The problems in the Chinese economy have weighed on luxury goods companies in the last couple of years, but luxury goods shares rose on the news of the plans to try and boost Chinese consumption. On here we're comparing LVMH in the black, Kering, which owns Gucci, in the pink, and Burberry in the green. All of them are up this week, and LVMH gained 9.6% yesterday. Please do give us a call if you'd like to talk about the luxury goods market in a bit more detail. In other news, the US Department of Justice has sued Visa, accusing the company of abusing its dominant market position. The department had been investigating Visa since 2021, so the announcement was not a huge surprise, but nevertheless it has weighed on the share price. Visa shares have significantly outperformed the S&P 500 over the last decade, as you can see by the chart here. Visa is the green line and the S&P 500 is the pink. Visa shares have gained over 450%. 10 years ago, many people were still using cash, and Visa has benefited from the adoption of credit and debit cards. Today, it's thought that around 90% of people in Visa's largest market, the US, have a debit or a credit card, and that means the scope for growth is not as high as it was previously. This chart shows growth in personal consumption expenditure in the pink, which is a measure of inflation, and growth in Visa's payment volumes in the green. Previously, Visa's volume growth has been ahead of the personal consumption expenditure index, suggesting that Visa had been picking up more customers who had been switching from cash to card. The gap between the two lines is particularly noticeable during the pandemic, when many more people were forced to shop online and to use card payments. More recently, the two measures have been growing at the same rate, implying that there aren't more customers being added. Do give us a call if you'd like to talk about our thoughts on Visa in a bit more detail. And finally, Nike shares have changed direction following the appointment of a new chief executive. The company performed well in lockdown because more people were exercising and just generally buying sportswear, but there has been some criticism of late that it has lost ground to competitors such as Hoka and On. Nike has now brought back Elliott Hill, who is a retired company veteran. He's highly regarded, and the shares gained 7% when his appointment was announced, so we'll be watching closely to see what changes he puts in place. Moving on to have a look at next week, we are expecting results out from Nike and from Tesco. That's it from us. Have a great weekend, and we look forward to seeing you next Friday.